we're accounting for the real world situations that fuck up your trading plan. Because the reality is, when you learn about these things in a textbook, when you learn about these things, in a video course and stuff like that, it's very easy to make every trading strategy look perfect, especially if you pick out the right opportunities in the market. But what's much harder to do, and really what you can only do if you've got all that real world experience, is acknowledge that there are going to be a lot of instances where your trading plans just don't work. Where they just go wrong. And one of the key examples of that I want to show you in this YouTube video right here are deviations. And those are the exceptions that I was talking about. You see, we form these exceptions a lot. If we take a look at where the bulk of the trading has happened in this price range, take a look at this. So from this point up until this point right here, we spent 13.5 days trading between this green, these two green lines right here. From this range up to where we are right now, we spent a further 24 days trading in this range. That's a very, very long time. There's only one exception, which is from here to here, where we spent 3 days trading outside of our two green lines. Over here, we spent 3 days trading outside of our two green lines. Over here, it was a day and a half, and over here, it was just a matter of 8 hours and then another 4 or so hours as well. My point is that most of our price action, time-wise, in terms of how much time we spent, happened between these two lines right here. But we had a number of exceptions. We had the first exception here, which, like I said, doesn't count, but we had this exception right here, which actually counts as 2. We had this exception, and this exception. These would have all really screwed you over. And this is the next key thing that I want to build on when we talk about this. If you want to be trading consistently throughout this year to potentially, really run up your account balance, is that you have to be aware of deviations. This is where the market really screws you up. What is the right word I'm looking for? Screws you over. And the reason for that is because if you're not keeping tight stop losses, you're going to get wrecked on moves like this. You might not get liquidated, right? If you don't set a stop loss, you might not actually get liquidated. Let's calculate it for this one right here. See, this was a 6% move to the upside. So if you're using 10x leverage, your liquidation point is going to be like 9.5% away, because 9.5 times 10 is a 95% loss, and that final 5% is the margin for the exchange. That's what they pocket. Usually, if you're on Bybit, for example, that might go into your insurance fund. Back to the point of this video here. These deviations are where you could really screw yourself over. And like I said, if you're using something like 10x leverage, you wouldn't actually even get liquidated because the moves aren't that big, but it would certainly be very, very uncomfortable. And I think that's something we need to keep in mind in ranges like this. The market likes to deviate a lot. And so if you're somebody with a higher risk tolerance, somebody that can tolerate potentially seeing a ridiculously large loss before you enter a profit again, if that's something you think you're okay with, you'd have actually done really well in this range. If you traded every long position on this support level, you wouldn't have dropped out of any single long position right here. Like I said, at most, this would have been a 55% loss. If you're comfortable stomaching that, and if you think you can sit with that for 2.5 days potentially, or even longer, well, you would have actually ended up being able to pull off some nice profits. This wouldn't have stopped you out. This wouldn't have liquidated. None of these moves would have liquidated you. And in 100% of the circumstances I've shown you on this chart, going back 60 days basically, you would have made money every single time if you were following strategy like this. Again, if you apply this over a long enough time horizon, this is the kind of thing that will add up. None of these profits in and of themselves are particularly impressive, right? I mean, we're only looking at 20%, 30%. If you want to be aggressive, call it 50, whatever. But we're not looking at huge profits in any of these single trades. But when you compound them, that is a lot of things going in your favor. If we bring ourselves back to that calculator I was showing you, and we look at, for example, I showed you 6 out of 7 trades would have gone well, assuming you got them in a row, which you wouldn't have, obviously. If you did, and you're looking at a 30% profit, that's already pulling a 5 times return on your money. If you're getting that 20% profit, you're still pulling a 3 times return on your money. And that would have only happened within a matter of about 45 or so days. That is a really, really good time frame to pull off a gain like this. I'm not saying that that's something that you would see. Obviously, it would be very hard to pull off in practice. But this does go to show that if you're willing to stomach these deviations, if you're willing to sit in a slightly bigger loss than what I think most people would be comfortable with, it could really go in your favor. Is it something that I would do? No, absolutely not. The reason I'm not comfortable doing it is because any one of these deviations could have easily turned into big market moves, and you would stand to lose 100% of your money if you end up hitting that, 9.5% or 95% loss. And so if that kind of thing happens, it's just too much of a loss, right? I mean, it doesn't make sense to trade that way, because it only takes one instance like that for you to completely fuck up and lose all of your money, right? So I don't think that that's a good idea by any means, but a lot of other people have been doing that, and they've been doing it successfully. So, while my job here is to, tell you what I'm doing and what I think is possible, I also want to show you that other people are doing this and they have been able to successfully pull it off. And even people inside of my own VIP group have been doing stuff like this for a long time. People that have a higher risk appetite than me, people who are willing to stomach more risk than I am, they've been able to do this, and they've actually done pretty damn well. So I think that is quite impressive, and certainly something that's worth paying attention to. Now, the other key thing that I want you guys to focus on is the direction of the trend. So this is absolutely huge as well. The trend direction has been bearish for a very long time. Now, I'm not saying that we're going to stay bearish. And if you're watching my videos, my normal analysis, you're going to know that I'm not actually super bearish in this market overall. But one of the key things to keep in mind is that we have been bearish for a very, very long time. And since we're in a downtrend, it might make more sense to generally focus on taking on short positions. Whether that means you take on short positions throughout small ranges like this, or just looking for the big moves, right? Because I mentioned there are two key exceptions to what I outlined in terms of these sideways trading ranges. I said the one key exception is price action like this. The other key exception is price action like this. I've already covered the deviations with you. Now I want to cover these with you. These are the actual market moves. If you're trading overall the direction of the trend, you are generally going to be more likely to be correct about your price move. You're generally more likely to be correct and therefore make money if you are trading the direction of the market. And the reason for that is you're just not going against the flow, right? Our job here isn't to change the tide of the market or anything like that. We're just going to jump in where it looks easiest and highest probability to make money. That's literally all you're doing as a trader. You're taking a calculated risk, and as long as you're following a good enough system, it doesn't matter how each individual trade goes, because if you're taking good calculated risks overall, it's nearly impossible to lose money, and it's nearly impossible not to make money as well. So, if you're looking at trading the direction of the trend, that might actually work in your favor. Now, again, when we're already 75% down and we have all the factors that I've been talking about in my normal videos, which you haven't watched, if you haven't watched, just go back and watch them. Make sure you subscribe and all that good stuff so you don't miss them. Obviously I'm a little bit uncomfortable doing that now when we're already, 75% down. I mean, if we were only, say, 50% down, then it's a different story and I can entertain this a little bit easier. But now, I mean, really, how much lower can we drop? Potentially quite a lot more. I don't know. I'm not here to have that debate with you guys today. But, if you do feel like this was too much, here's the thing, is if we do end up kind of retracing, if we do start, for example, here's a great example. If we on a macro scale now were to set a higher high, right? So the last high that we set on a macro scale was up here. The last one before that was here. The last one before that was up here. If we manage to set a high now that's higher than this one, so basically if we rally up and we get above 21,400, if we get like anywhere above this green line, like up here, that would mean that we've now set a new higher high and that we're potentially in an uptrend. This would be a great opportunity because this is a new trend, right? Currently, we're in a downtrend. If we enter an uptrend, this would be a new trend, which means that we could have a lot of opportunities to make money with something like that. And if you generally stick to trading that particular direction more than trading the direction which is opposite to the trend, then you will, as I said a few minutes ago, generally be looking at making more money. You're just generally going to lose less money. You're generally going to make more money because that is the direction of the trend. The other big thing is you're also going to be catching big moves. If you're doing something like that, the big moves that really happen, we talk about 20-30% profits with these little ranges, super achievable. These are what add up. These are really, really cool. But you do get home runs every now and then. And the home runs are always only going to come when you trade the direction of the trend. Assuming you've used that same 10x leverage, which you generally wouldn't. For trades like this, you're going to be dialing that leverage down because you just have a bigger margin of error, right? You need to keep a bigger stop loss. You can't keep a tight stop loss on trades like this because you might be wrong and you might need, to give the trade a little bit more breathing space. If you're using, just for argument's sake, if you're using the same 10x leverage, this would have resulted in a 330% profit, right? In other words, that is a 4.3 times gain. Do the math, 4.3 times gain, not 3.3, specifically a 4.3 times gain, which again, on that $10,000 starting balance, if you manage to pull that off, you're instantly multiplying your gain, right up to $43,000 from 10K. If you've already done a little bit of compounding, let's say you've already managed to pull off, say, those 20% profits in a row, and then on top of that, you multiply by 4.3, you can really see the power of this. Again, this is assuming a 100% success rate, so no one's going to pull this off in real life. But the point still stands, where if you're able to compound these gains, and then on top of that, throw a home run onto it as well, now you're looking at really, really big money, just starting from a balance of 10K. I mean, really quite substantial gains. It gets very fun when you put in the bigger numbers, right? Like 50K turns into more than $500,000 with these kind of numbers. Again, not saying that this would happen again because you've got to get a 100% success rate, but what's very, very interesting about this is that it doesn't take a lot with these compounded gains and with catching the trend to really blow up your account. The reason that I said towards the beginning of this video that this is more likely to work in my opinion than, just jumping into a shitcoin project or an NFT project and stuff like that is because those are things where you just kind of throw your money into something, just kind of sit on your hands and hope that something interesting happens. And you know what? It might work. It did work for a lot of people throughout 2021 and so on, but we're not in that market right now. We're in a very different market. We're in a very difficult market. That's literally the first thing I said to you in this YouTube video if you go back and rewind. We're in a very difficult market right now, and we're not just pulling money out of the fucking thin air like we were before, which means that you need to really step up your game if you want to make money in this space. I know that this isn't what you want to hear, right? Obviously, people want to hear that there are easy ways to make money, but you've made it this far into the video now. We're like 30 minutes into the video, and hopefully you're starting to pick up that these are very detailed steps, very, very detailed strategies that I'm going to be taking on. Not saying you should, in fact you shouldn't because I'm an idiot and I don't know what I'm talking about, but these are very, very detailed strategies and steps to take in this market. And they're not even particularly easy, right? I mean, they're quite straightforward, but they're not going to be easy to implement in the market moving forward. And that's exactly what you would expect during a market like this. If you start to see opportunities that look easier than this, I really want you to doubt if they're actually valid or not, because you aren't able to make easy money in markets like this. Just point blank. It just doesn't happen. Some people will pull it off through just absolutely ridiculous levels of luck, but I don't have that level of luck. And you know what? I'm willing to bet that you don't either. That's why you've made it this far into this video, because you're a realist. You're a little bit like me. You accept and you fully are okay with the idea that things might not always go the way they do for that crazy 0.01% of people that just pick the right fucking coin somehow, and you'd actually rather have some more direct input on what kind of results you pull off. This is what this YouTube video is all about. Something else that I want to talk to you about that is absolutely huge in market situations like this, especially when we are in these downtrends, is that when we're in downtrends, we're generally going to be seeing our altcoins dropping a lot harder than Bitcoin. I'll give you a great example, right? From Bitcoin's all-time high, up here at $69,000 down to where we are right now is a 75% drop. And actually, if we just measure it down to our absolute low, our low that we set at $15,500, that was a 77% drop. Absolutely huge, right? Because the more we drop down, the percentage drop doesn't actually get substantially higher, but it is a really, really big difference. I mean, just from 30K down to that low is already a 50% is a 50% loss, right? Bitcoin dropped really, really hard. But you know what drops even harder than Bitcoin? Yeah, exactly. Our altcoins drop a lot harder than Bitcoin. Let's just take a random one that's really big, like Cardano right here. We look at Cardano and we take a look at how much it's dropped from its absolute high down to its absolute low. This was a 92% drop. Now that's not just slightly worse than Bitcoin's 77% drop. That's not 15% worse. I have to make this point very, very clear. That is not 15% worse than Bitcoin's 77% loss. This is like 2 times worse, or maybe more. I don't even know the math, but this is way worse than minus 77%, because every additional percentage point you drop when you start getting deep into these losses is a huge difference in price, which means that if you're able to game this kind of thing, if you're able to expect this kind of thing, and then you trade the same thing with altcoins, you stand to make way more money. You stand to make way more money if you're taking up short positions on altcoins than on Bitcoin during bear markets, because they're going to be moving in much more extreme ways. You can do the math on this. For Cardano to recover from that low that we set back to its all-time high would take a 1,170% move. In other words, a 12.75% move, 12.75 times move. You have to more than 12x your money to break even, right? That's a 92% loss. For Bitcoin, we're looking at the very same range. For Bitcoin to pull off the same thing from its low up to its high, Bitcoin only needs to rise up by 330%. The loss is only 15% different, right? We're only falling, it looks like, by an additional 15%, but the difference to make that money back is absolutely bloody enormous. And this is a really, really big deal that you guys have to keep in mind. We look at coins like Ethereum as well. Take a look at this. From its low up to its high is a 440% recovery that it needs to pull, and its loss was only minus 81%. It wasn't actually even that much worse than Bitcoin from its all-time high down to its market cycle low, but to recover it, it has to pull off a way bigger gain than what Bitcoin has to pull off just to recover that gain. This is a really, really interesting point in math. What I'm aiming to do in a video like this is just kind of break down like really quite simple math for you guys, things that aren't actually very complicated. A lot of people think you need like a fancy degree or some bullshit like that to be a good trader. Like, I dropped out of high school, right? Like, you don't need a crazy education for this kind of stuff. You just have to understand the differences with these numbers and just do a little bit of baseline thinking so that you understand what we're looking at here. And you're actually going to have a huge edge in the market. I think that this is really, really important because people don't actually understand how much of a big difference these numbers can pull, especially like I showed you with the compounding examples over here. And when you start to understand these things, it can actually put you at ease a lot more. Because if you know that the market is potentially going to be trending down and you just trade the same position you would have done on Bitcoin, but with an altcoin instead, you're going to have a much easier time making money because they drop so much harder. If we take a look at Bitcoin's big drop right here, where from its high to its low back in June of last year, Bitcoin managed to drop by 43% within the space of about 2 weeks, which is absolutely huge. If we look at the same kind of thing that happened on Cardano, take a look at this. Cardano at the very same time, which was... Cardano wasn't actually moving at this time. It's probably this move that we can compare it to. With Cardano right here, it managed to drop by 57%. Absolutely huge, significantly more than Bitcoin as we've established now. The same kind of move for Ethereum. This was a minus 55% drop. Again, it was still a big drop for Bitcoin, but we're looking at a bigger drop for altcoins. So if you're looking to trade something like that, you stand to make more money with the altcoin market. The same thing applies in reverse. If we manage to get a bull market now, we're probably going to be seeing altcoins recover a lot stronger than Bitcoin. And all of that boils down to the simple fact that Bitcoin is a much larger market. Bitcoin overall is still quite small, but compared to our altcoins, it's much larger, which means that it's much harder to move the market. It takes a lot more capital to flow in order for the price to go up or for the price to come down. But for altcoins, that isn't the case. It takes a lot less money for the market to move up or down, which means that we tend to see more volatility. On top of that, we just see more manipulation as well because these are smaller markets. So that can also make them really just spike like crazy and do absolutely stupid things in the market. And I think that's well worth keeping in mind as well. And what I actually want to lead on from that and talk to you guys about as well is that if you're able to identify, for example, a reversal for Bitcoin, generally what we're going to see, and I do talk about this quite a bit on the YouTube channel as well, is that you're going to see a bit of a trickle down. And this is one of my favorite things, and that's why I'm saving it for last in this video. This is one of my favorite things to be able to identify as a trader in this market, because if you're able to see that Bitcoin might be pulling off off a reversal and Bitcoin might be looking pretty healthy, generally, especially in situations like we're in right now, where we've been in a long-term bear market, generally what we're going to see is that Bitcoin will first perform very, very well. And then, because Bitcoin is performing well, people are going to feel excited and happy and willing to take on more risk. So then we're going to start seeing that money flow over into Ethereum. Ethereum is going to do quite well, and then we're going to see that money flow into the rest of the altcoin market. And what makes that really, really powerful is, if we're in a situation like that, you actually stand to trade the same thing on Bitcoin and then on Ethereum and then on altcoins, stacking the same trade idea, the same risk profile. When you've made your Bitcoin trade and you're in a profit, you can open your Ethereum trade, put your stop loss at break even on the Bitcoin trade, open that Ethereum trade, make some money, stop loss at break even, open the altcoin trade, stop loss at break even. Your risk effectively drops. You're opening up some risk, you're dropping it back down to zero, but you're still making money. This is the ultimate life hack, as a trader in market situations like this. And it's moves like this where you can really compound. Again, this is the name of the game. If there's only one thing that you take away from this YouTube video, other than knowing that you absolutely must subscribe to this channel, because this is the most grounded, realistic technical analysis and trading channel on YouTube that there is. If there's only one thing other than that you take away from this YouTube video, is that compounding is the name of the game right here. If you're able to pick that up and make your life easy by trading the same thing in different markets at different time frames, you are going to have a very, very easy time. It's actually similar to, for example, the S&P 500, where, for example, if the S&P 500, a major index in the United States, performs well, that's generally when you're going to start to see that optimism come back into Bitcoin, right? So it's the same thing. We see that trickle-down effect where when the big markets do well, people start feeling happy, they start feeling greedy. When you feel greedy, you want to make even more money because it gets to your head. It feels like a drug, it's an addiction, it's a rush. You want to put that money into new markets. You want to take on even more risk and make even more money. We see the same thing playing out all of the time. And that is actually a really, really big hack to be able to make a lot of money in the market.